Welcome to the Entrepreneur Motivation Podcast. I'm your host, Chris Bello, and today I've got Chris Miles on the show. Chris, welcome.
Hey, good to see you, Chris, part two.
Chris, part two. Yeah, we just did a little bit on your show as well. And you are a cash flow expert and anti-financial advisor. I love that. You're not just, you're like anti-financial advisor. It's just like different, right? Most people are like, hey, I'm a financial advisor. We're going to talk about putting your money away for 30 years and you can't touch it. But you like to preach, no, we want to enjoy stuff now. So you're teaching people how to increase their passive income, investment opportunities, and things like that. So why don't you go ahead and introduce yourself in case I missed anything there?
Yeah, that pretty much sums it up. Like I'm actually a recovering financial advisor, right? So
that's a good way to put it.
I was a financial advisor about 20 years ago. Did that for 4 years. But I'm one of those guys that like evidence. I like to know that things work. And 4 years in, even when I inherited clients that had decades of advice, they weren't financially free either. And it really came to a head at the end of 2005. I went and called up one of my friends, wish him Merry Christmas, Happy New Year, and he left to go do real estate investing with his dad. And I was like, well, good luck with that. And when you're broke, come back and work for me again in my brokerage, right? And so I call him up and, seeing how he's doing. And he's like, man, like things are awesome. My dad and I, like, we've already doubled his income as a professor at the local university. I'm like, come on. That's too good to be true, as we always hear in the real estate game, right? Like that sounds like a Ponzi scheme, right? And he's like, no, man, like we're doing it. And so we got in this debate about what's better, stocks or real estate. And finally he stopped me and said, Chris, how many of your clients are financially free? And he's like, and I don't just mean retired. I mean, like they don't worry about money. And I'm like, oh, well, that's all of them. So none. They all worry about money, even the retired ones. Mm-hmm. He's like, well, great job, Chris. Way to go. How about this? How many of you guys as financial advisors are financially free, not off the commissions you're earning, but actually doing these mutual fund investments? How many of you guys could retire off that right now? And I started thinking about the guys that have worked in the office, some of them since the late 70s, right? When financial advising really started to pick up. And I said, well, none. Maybe this one guy is. And I found out later he was, you've been in Texas. He was all hat, no cattle, right?
That's a funny phrase. Yeah.
Yeah. I mean, he was just all show. And once he got fired from the company, he was scrambling, looking for work because he was just, flashing stuff.
Exactly.
And so I'm like, okay, well, what's the answer? He's like, I'm not going to give you the answer because you just got to argue with me that stocks are better. I'm like, come on, give me something. And so he said, all right, if you're serious, get this Robert Kiyosaki book called Who Took My Money, which is a lesser known Rich Dad, Poor Dad book, right? Mm-hmm. Get that one. And then go on the AM Talk radio show. This is pre-podcast. He's like, listen to this AM Talk radio show with these real estate investors talking about me and investing and founding fathers and principles and all that kind of stuff. And so I did. And 2 months later, I even went to one of their events and they're ripping on financial advisors and why, saving for the long haul is stupid, especially when the market goes down, because then the long haul gets longer. High risk creates high return. That's stupid because when did the 90% chance of losing become a 90% chance of winning, and all this kind of stuff. I'm like, wait, who would teach this crap? And I'm like, oh, it's me. I'm the idiot.
Oh no. That's like a realization that just happens all at once, huh?
Oh, it was horrible. And so, March of 2006, I quit. I vowed never to teach about money again. I was just going to be a mortgage broker and then teach ballroom dancing at the local university. Right. And so I started to do that, but again, it drove me nuts. These guys knew things I didn't know. And so I'm like, I want to know what real estate strategies they're using or whatever. They were basically fix and flippers, right?
Yep.
Really not even fixing. They were just flipping actually. Because 2006, it was hot. 2005, everybody was making money from flips. So they were doing that. And, but in any case, like I started to learn from them. I started to, put some pieces together and almost accidentally, I found myself out of the rat race, and I was maybe working kind of like you were, right? 4 or 5 hours a week, making, like 4,000 or 5,000 a month. I'm like, wait, I only need 3,500 a month to live. I only had, 2 young kids. I'm out of the rat race. I'm 28 years old. What do I do now? So I had to have that question, what I was going to do when I grew up. And so 2007 came out of retirement with some other guys that were in the same position. We created a company together and that was fantastic until a few months later when 2007, when, the credit markets started drying up. And I remember July of 2007, like I was trying to do a cash out refi and they made me wait 2 months until they finally told me, sorry, we don't do those anymore because you're a business owner. We don't like entrepreneurs. And pretty much I went from millionaire to upside down millionaire. I went from like retired to now all of a sudden like in the hole 15,000, 16,000 a month. And I ended up going over $1 million in debt by the end of that recession. Had to dig out of it. No bankruptcy, but I had no money, no credit. Had to just get scrappy, and dig my way back out of that hole, and was able to become financially independent the second time into 2016. So kind of a long battle.
Incredible story.
Yeah, it's a pretty crazy story, especially if you're an entrepreneur. You know how those ups and downs goes, the ebbs and flows of life. But I'll tell you, like the lessons I learned were invaluable, and got me to where I am today, a lot wiser when I got into my 40s. I'm like, I'm not gonna make the same mistakes I made in 2007, 2008.
Yeah, absolutely. And I think mistakes, the beauty of it is that if we never made mistakes, we would never really learn, because mistakes and failures are what cause us to learn. I mean, it's always the painful lesson that sticks the most, right? If it doesn't hurt that much, it's almost like when you don't work for something, you don't appreciate it. I think the same goes for pain. The more uncomfortable we get, the more we take away from that lesson.
Absolutely. Yeah, so, it's my pain becomes everybody else's gain as a result, right?
So yeah, if we could avoid having to retire twice, because the first time, went upside down, then please do teach us. That sounds amazing. But I do love that as well on your intro of your podcast, how you said you retired twice by 39, but you don't give it all away that actually you had to retire twice because the first time your business had gone negative the other way. So thank you for sharing that and for the brutal honesty. What was one of the main lessons that you learned during that time? Like, what would you do differently now than you did previously?
Yeah, a few things. One, I learned that boring is sexy, right?
Yes, very.
I mean, we all know like deal operators and things like that. But whenever I see someone who's in the real estate game and they're like, "Hey, I'm thinking about doing this now," right? I was like, "Okay, cool. Well, you're not getting my money. Like you test it yourself with your money. You go all in." And then after maybe several years, I might consider putting money with you, right? So, staying in your lane, boring is sexy. Like you want those deals that you just know like the back of your hand. I mean, just Chris, like I know you can do wholesaling. I mean, you got it down to a freaking system where, you don't even have to be there anymore, right? Like, the numbers, so you know exactly what needs to happen for you to guys to be profitable, or the deal's not going to happen.
Right.
That's the way you should be with anything when you're dealing with your money, right? You should be at a point where you say, this is just like clockwork. It's like watching grass grow almost, but it's the thing that works. You're not just buying into the hype. You're not chasing after the next crypto token or whatever crap is out there. Like you're going after the thing that you can create wealth with. So I think that's number one. Number two, I learned to invest for cash flow. Speaking of crypto, that's one of the big reasons why I don't put a lot of money with crypto, right? Like it's cool. You can make some growth, but I only gamble with money I can lose, but for most of my money, I want it paying regular, stable cash flow, which is why I love real estate. You don't get that in the stock market. And I'll tell you, because I taught people how to trade the stock market, right? I taught over 200 people how to trade stocks and options, like one-on-one. And funny enough, I even had a guy a couple of years ago who taught other people how to trade options, came to me, said, Chris, I need to learn how to make passive income because I'm still stuck to my freaking computer. I can't do anything because it's not passive. I have to keep working every day. Even if it's just, monitoring my trades and stuff, I'm still stuck doing that. And it's not actually income. It's just, the money grows, but at what point can I feel safe to take it out? I can't, right? Because it doesn't actually produce income in the stock market. That's the big thing people don't understand, is that the market, this is why financial advisors suck and why they fail at what they do. You can't really create a good stream of income for the market. That's why they tell you to pull out. Really, the wiser ones would say pull out no more than 2 or 3% of your money. Well, if you saved up $1 million, you're a millionaire. That means you're pulling out 20 or 30,000 a year before taxes, right? that's you. Congratulations, you are a broke millionaire. You live in the poverty level, and you're a millionaire. That's how the traditional financial advising is.
Yeah.
But with real estate, like even if it conservatively, like my clients might buy a turnkey property, even if it's like new construction, they hope for at least a 10% cash on cash return, right? Well, $1 million is not 20 or 30,000 a year before taxes. With that, they're getting all the tax breaks. They probably don't pay any taxes on that money, and they make 100,000 a year. Very, very different leverage of money that financial advisors just won't do because they don't get paid to sell you that stuff, right? They only sell you they basically sell you Mexican food when it comes to money, right? They sell you the same ingredients, rice, beans, cheese, meat. I mean, every Mexican food you see, it doesn't matter what the name is, it all has the same ingredients,
yep.
right? It's almost like I went to eat Indian last night. It's kind of the same thing, other than slightly different ways of preparing it, but it's all kind of the same ingredients, same, spices and such. Well, that's true here. Like it's with financial advisors, it's really just mutual funds and insurance, right? With annuities and things like that. But it's almost all the same crap. What makes us think that if it hasn't worked up till now, what makes us think it's going to work in the next 30 or 40 years?
Yeah. I love that question you asked or that you were asked at the beginning of, do you know any, financial advisors that are retired, that are financially free? And you kind of like were scratching your head, like, you know what? Come to think of it, no, everyone here is just making their income selling the products and making commissions. And I always preach that as well, is make sure that you're getting advice from someone who has actually achieved what it is that you want to do, because everybody has advice about everything, crypto, real estate, investing. Oh, it's risky. And the person who's never even bought a property is telling you it's too risky, right? You got to really evaluate who is giving you advice and are they qualified to actually do so. And so I love that you're just preaching that message of, no, I wanted to make sure to go figure out what is working. How do I get financial independence? And then I can go and teach others how to do as well.
Yeah. It's such a weird thing for people to switch that mindset, right? To switch it around. Cause one, when people tell me, oh, real estate, that's too hot. I'm like, you realize that the stock market has broken records in the last 13 years. We're about to have the 13th up year in a row. That has never happened in stock market history, ever. I went back to the 1800s to look for it. The most I could find was 6 years in a row, and that was in the 90s, right? That's straight up. Now we have 13 years, more than double that. And you think that it's going to keep doing what it's doing, especially if you're like a millennial, right? Like your age, you've never seen the stock market go down if you've been investing in the stock market since like your late teens or 20s, It's always gone up. That's deceiving. That's going to throw you off. This real estate market's not the same. It's not based on emotions like fear and greed and all that stuff. By the way, the economy can be strong and the market could tank, and vice versa. The market could be the market could skyrocket, but the economy could be tanking, right? It's all based on emotions. It's crazy. Real estate's not that way. Real estate's such a slow, steady game, and it's so much more certain. Even the last six recessions, only once did it go down, and that was the last one. But since then, real estate's either stayed the same or gone up during recessions. So why would I want to take these high risks to get mediocre returns in the stock market? That the market, by the way, in the last 30 years, even with the 13 years in a row, has only averaged about 8.4% return. 8.4 before
and no cash flow,
taxes. Yeah. It's just dumb, right? It's just ridiculous. That's high risk. That's even at the best it's been. You're like, wow, I might get up to 8.5%, 9% if I'm lucky, and take all these risks, or I can actually go do real estate, make double digit returns with a lot less risk, more certainty, more cash flow, like you just said, right? And be better off. And when I have clients, like I had one guy retire from Boeing, he had $1 million. Like, how do I turn this into 120,000 a year? I'm like, make 12%, So we started looking at buying properties, and he didn't want to buy all properties. So he got like a duplex and stuff. But we ended up like getting into some syndications and funds and things like that bridged the gap. And then now his pension came out from Boeing again saying, here's another $1 million. He's like, cool, let's get that going. Like, right, let's get this beyond 20,000 a month now. And that's the kind of thing that you wouldn't see that. That same $2 million with a financial advisor at 3%, that you're trying to pull out because of inflation and not trying to run out of money, that's 60,000 a year before taxes versus 200,000 a year tax advantaged. This should be a no-brainer for people. But again, because the masses are broke and doing the same thing, people go for that comfortable savings, thinking that they call themselves conservative investors, but in truth, they're really comfortable savers. They just do it because it's comfortable. It's what everybody's doing. But the truth is, everybody's not financially free. So why would we follow those people in the first place?
I love that. Comfortable savers. I'm writing that down because you're right. They're not getting very much return at all on their money because it is safer. It's a lower return overall versus taking these, real estate investments where you're investing for cash flow and appreciation. And what I always hear, the rule of thumb is invest for cash flow, and then any appreciation is just a bonus. What got a lot of people in trouble before was that they were kind of just banking on appreciation, and they bought assets that were not really assets. They were losing money every single month. They overpaid for these properties. They didn't do their due diligence. And then when things went south, they were in the hole every single month because they're like, man, my mortgage is $2,000 and I'm only making $1,500 on the rent, right? It was backwards versus having the $1,500 mortgage and making the $2,000 a month.
Yeah. And that's where like the Dave Ramsey stuff, it really, for lack of a better word, like it regresses us a little bit, right? I was going to say another word, but I didn't want to be insulting, but it really does. Like it regresses us in what we do. Like people are trying to aggressively pay down debt, which at super low interest rates now, right? Historically low. And they're trying to pay all that down. Yeah. Free money. And then they're saving it in their mutual funds. I'll give you an example. A lady I just spoke with today, she's like, I don't even know what my cash flow goal is. I'm like, well, what's your monthly expenses? She's like $5,000 a month easily, like probably not much more than that. I said, great. Your cash flow goal to be financially independent is $5,000 a month, right? Which I'm thinking is awesome. I'm like, I wish I could live on $5,000 a month with our 8 kids, but for her, she's like, $5,000 a month. I'm like, okay, well, what do we got? She's got $300,000 in old 401ks that we can go move into self-directed IRAs if we wanted to, or just cash out. But even if we self-directed it, that's 10%. That's $30,000 a year. That's halfway to her goal right there. She's got another 200,000 savings we could use, which again, even if it's only 10%, and I always try to stay conservative, that's 20,000. She's at 50,000 a year, over 4,000 a month.
Almost there.
And then she's got equity in her house and she was aggressively paying it down. I said, we could probably refinance your mortgage, save a couple $100 a month. This does include, because she's an entrepreneur, right? We can free up a lot of money probably on taxes because she does have a good CPA. She's not really budgeting her money either. So we could do stuff there. Even with pulling out the cash equity in her house, net at least $5,000 a year there. So I told her year one, we can have $55,000 a year. You reinvest that $55,000 a year the next year, you've already hit your goal in 2 years. The funny thing is she'd interviewed other financial advisors, right? The traditional guys. And they're saying things like, well, you got that 300,000. So, keep saving, you might be able to pull out 10,000 a year so far. She's like, don't give me that. I don't want 10,000 a year. And I'm telling her, hey, year one, we can get you at 55,000 a year. And then by year two, over 60,000 a year, and it's just that this is why I can't stop, right? Like when I interviewed for my podcast, talking about like how you can't stop, like this is why I can't retire fully, because this kind of stuff needs to be taught. This is the kind of stuff that everybody needs to have to liberate themselves, to live a life where they don't have to worry about money, right? They're living free. They're work optional. They work because they want to, not because they have to. And that's the kind of world I want to create. That's the freedom that I want people to experience, where there's so much more options. You get to have a greater impact, especially if you're a great person. Like if you're a great person, and you're a person that's willing to give back and do great things in the world, you should have more money. You need more freedom so you can do bigger things.
Absolutely. That's a really powerful mission, because I'm kind of right there as well, where in terms of myself, I can take care of myself. Now I don't have 8 kids. I know that's a higher monthly expense for sure. So kudos to you. But once you take care of yourself, you're kind of like, well, what's next? What's my why? What's my mission? Yes. And that's why even though you could be done right now, if you wanted to, you're going out there to help others, because it's insane to me, right? They don't teach this stuff in school. I had a finance class and I learned about, I don't even remember, I got a C in that class, and none of that stuff was applicable to my personal finances. It was always about bank history and how certain regulations came into place, and, the present value of money or future value of money or whatever. I can't even remember it. I can't even tell you. And so financial advisors, so many that I've met, just like you said, with your client, they tell you the same things, the same strategies. You don't really have access to your money. And so this does need to be shared, because so many people don't realize that this is even an option. They just assume, put my money in mutual funds, keep it there, have a 401k that my company matches. And then when I'm 60 years old or 65 years old, I can touch it and take out 2 or 3% a year. Like that's no way to live.
No. You know what's even dumber? If you're an entrepreneur, they're meeting with you. And I know, because I did this as a financial advisor, right? They're meeting with you, telling you, hey, you should put your money and invest in these companies, right? These mutual funds, which are invested in a bunch of companies. Shouldn't they be telling you to invest in your own company? Like, right. And that my brother-in-law pointed that out. He came from a millionaire family. His dad was actually run away from home, was homeless at 16, went and got his first Chrysler dealership. He ended up owning it at 19, became a millionaire at 21 in the 1960s, right? So that's like multimillionaire today.
Oh yeah.
Well, it's funny because when I went to talk to him, talk to his son, He's like, well, let me get this straight. If I give you 12 or like 10 grand to play with, you're telling me you can make me 12% or $1,200 a year, right? And I'm like, well, hey, there's no guarantees, but hey, it's been returning that since 2000 BC. So yeah, 12% is it, which was not a real return. I found out later. He's like, okay, so $1,200 a year. But Chris, I can take $10,000. I can put a down payment on a vehicle, turn around and flip it, make $20,000 profit in a couple months. So why would I invest my money with you? I'm like, well, you should be diversified. You should put all your eggs in one basket. Besides, business is risky.
Right.
You should be investing here in a market you have no control over. Right. That's what I was telling him. And he's like, all right, well, that was
okay.
Yeah. He's like, see ya. Yeah. Get out of here. Right.
Right.
Best thing he could ever done, because it was such common sense. And entrepreneurs get this. Like, they get that common sense. But the problem is everybody around you is trying to tell you you're supposed to be doing it that way. And that way, I'm telling you, again, being inside in that world, it doesn't work. People are not becoming free doing that stuff.
100%. I just saw this in a Facebook group maybe a week or two ago where someone said the same thing. They were like, hey, I know this isn't the advice that you always hear, but as an entrepreneur or business owner, your best investment is in your own business. It's not that 401k. Like, you don't need to have the same 401k that somebody who is employed does, because that's their main investment vehicle. Your business can return far more than that would over the course of, if you put time and effort and blood, sweat, and tears into it for 10, 15, 20 years, imagine what can happen with that. Like the Chrysler example for the Chrysler dealership that you just talked about. I mean, you said 19, he bought it, and at 21, he was already a millionaire. I mean, things like that can happen with your own business, whereas being safe and doing the compounding interest and all that's great. But I mean, it takes time, right? Time's a factor in that, versus here, it's not really like a shortcut, but it is a way to maybe speed up the process a little bit.
Right. Exactly. I mean, you have no guarantee with the returns of the market. You might have to spend a couple lifetimes to get to the point where you're financially free.
Right.
Nobody has time for that, right?
We don't have a couple lifetimes.
No, we don't. All we have is here and now. And we don't even have a guarantee we'll be alive when we're 60, like every financial advisor tells you. So what about today? That's why now is the best time. That's why getting that financial freedom number as quickly as possible is what's key, and doing it in a way that's wise and safe, not trying to shortcut it by gambling in stocks and gambling in cryptos and all that kind of stuff, trying to bet on things you have no control over, right? You want to be able to make sure you can do it in a way that it's going to work.
Such great advice, because I have, you said gambling, and I'm like, that's exactly what it is. Whenever you're putting money into things that you're not sitting there in the boardroom making decisions about these companies. You're not sure how they're going to be run, what decisions are being made. Is the president of the company or the CEO going to tweet something that like tanks the stock? Like, you never know, right? Those things are outside of your control. So I love the message that you're sharing here with people today about taking control of their own lives now, because I mean, I want to live till I'm 60, 65 or 80 or whatever the year is, but I'm 31. That's far, right? I can't think that far. I want to enjoy it now. And so being able to teach people you can do that, and this is how, that's really game changer. And I know you got another appointment coming up here in a couple of minutes, but are there any last takeaways that you would like to leave for the audience before we let them know where to find you?
Yeah. I would just say that, it always comes back to that passive income, right? Like the things I learned from doing it wrong in my 20s, it's really just about focusing on cash flow, focusing on the things that are considered boring, right? Things that look like you're watching grass grow sometimes, but it's the things that are certain. And I'm telling you that the answer is not inside the traditional game. It's not inside the stock market. It's outside the stock market. It's outside these markets that are up and down at every whim. It's about doing something that all of us have done. And I know you said on my show too, you said, you're like, I don't remember what it was. Like 98% of people that are wealthy have real estate, right?
Right.
It's true. Like, even if they made it in business, I'll tell that to people all the time. Like, if you look at the richest people in the world, they did it in business first and foremost, right? And then real estate is often a big part of that portfolio. That's where it is. And so why try to duplicate mediocrity? Why would we duplicate the stuff that everybody else has already done that we know hasn't worked, but not follow the people that have made money? It wasn't because they were born into richness. Most of those people were first generation. Do the things that we've done, which is in business, real estate, or things that are in that kind of arena that are more of the alternative space. That is the answer. And man, and I'll tell you, if you're a business owner, you get to the place where you have enough passive income where you work because you want to, not because you have to. Crazy magic happens in your business. you actually make more money in your business too. Because when you're like, I'm doing this because I don't have to, I'm doing it because I want to, all of a sudden people get attracted to you. You get more clients, more customers,
Right.
and you actually make more money in your business because you don't need the money.
It's
you don't
so
have that
funny
business
how that
breath
works.
for Eureka. Yeah, it's like it's magic. It's awesome. So it's just one of those things that everything works together for your good.
So many great nuggets, Chris. I really enjoyed this conversation. If someone wants to go get more or listen to your podcast, what's the best place to send them over to?
Yeah, two places you can go. I mean, one, you can listen to my podcast on iTunes, YouTube. It's just the Chris Miles Money Show.
Yeah.
Or you can go to our website, moneyripples.com.
Perfect. I will link that up in the show notes, and I can't wait to release this episode so the audience can start to realize that the time is now. Don't wait till you're 60 or 65. You can start making those right investments for yourself today. So Chris, thank you once again for your time. I really enjoyed it.
Thank you so much, Chris.
Hey everybody, thank you so much for being a listener to the show and for checking out my message. If you've been here for a while, I'm especially grateful for you, but if you're new here, thank you once again for being a listener. Just wanted to let you know, I help people buy, sell, or rent real estate across the nation in the US. I probably could even help you across the world, but it just gets a little more difficult with time zones and setting up times to chat. If you have any questions at all, shoot me a DM on Instagram. My handle is Chris Bello _, or you can also go to my website, chrisbello.com/real estate. Again, that is chrisbello.com/real estate. Happy to help any way that I can. And thank you once again for being a listener.